Welcome, everyone. Thanks for joining us today to discuss the Sky Quarry investment opportunity. I'm excited to dive into this with you, especially since the window of opportunity to invest closes tomorrow. If you've been considering getting involved, now is the time to act. Sky Quarry has raised over $22 million from more than 7,000 investors. This level of support speaks volumes about what the potential people see in this company. And personally, I believe there's never been a better time to invest in Sky Quarry. Landfills are bursting at the seams, and we need new ways to deal with our waste. Sky Quarry's figured out how to recycle old roof shingles instead of dumping them. It's a big deal for our overflowing landfills. And not only that, they've patented the system to transform this industrial waste into all kinds of useful products. So we're fortunate to have Sky Quarry's founders with us today, Marcus Lawn and David Sealock. These guys have been working tirelessly to bring this vision to life. And before we want to begin, I want to emphasize that opportunities like this don't come around very often. The chance to get in early on a company addressing such a widespread issue is rare. And even more exciting is that this company is planning to list on NASDAQ very soon. It's a significant step for any growing company. We'll cover a lot of ground today, from the technology behind Sky Quarry to the market potential. Feel free to ask questions in the chat. We'll open it up for a conversation at the end for questions, but in the bottom right corner, you can add your questions anytime along the way. And remember, tomorrow is the last day to invest at this stage. All right, let's get started. Marcus and David, over to you.
Thank you, Abby. I'm going to introduce myself first. My name is David Sealock. Marcus and I have worked together quite some time prior to Sky Quarry, but we got the concept in terms of making sure we built it off of strategy, logistics, and strong people. We're very pleased with the team that we've created, the directors that we have on our board, and the manifestation in terms of how we've evolved this company since 2019 to the current time frame of listing on NASDAQ this month. So thank you for the introduction, Abby. I'd like to thank everybody for attending this call. Thank you. Marcus, before we get started, would you like to say anything?
Yeah, I'm here because David and I kind of surfaced this business opportunity about 5-6 years ago. Really seeing an opportunity to have a vibrant business combined with solving a major problem, and we kind of built the company over the past 5 years to get to this juncture, and we expect a lot of growth from here. This is really just a stop on the road. So I'm excited. This is probably one of the best clean tech deals I've had the pleasure and opportunity to work on in my entire career, and I've raised hundreds of millions of dollars for clean tech deals over my career. So I'm really excited.
Thank you, Marcus. Let's get started, Abby. Thank you. Again, we have our disclaimer. Everyone sees that. That keeps us on the right side of wrong. Thank you. Why don't you discuss the topics that we're going to be going over today, Abby?
Great. So first, we're going to start by looking at the technology and the company mission. Really, the sustainable energy process is, I think, really interesting. They've got a lot of patents, and I think it's going with all the market forces around landfill diversion. There's a lot to, I think, celebrate around their energy process and their patent portfolio. Then we'll look at corporate milestones and why the business model is so scalable, followed by our expansion strategy and future plans. And then lastly, we will be, talking a bit more about the current offering and planned NASDAQ listing. So remember, tomorrow is the last day on the current offering. It does close tomorrow.
Thank you. And you can skip over slide 4 very quickly. Slide 5 is where we start, a sustainable journey. And one of the things that we want to talk about is that since we've been doing this for 5 years, we understand that the technology is one thing, but the ability to integrate the energy solutions, but more importantly, taking the time over 5 years to de-risk the technology, de-risk the process, making sure that we have the assets in place to basically leverage as we go through this is a key milestone that we also want to talk about. But our plan on our sustainable journey is making sure that we can conserve resources, we can reduce landfill waste that we're going to talk about, what kind of problem this is, and more importantly, the problem of the wastelands, the waste files that we have right now, opposed to emissions in terms of what we can do with our closed loop system, We are trending toward a more sustainable energy approach as we go with this company. You have to remember one thing, we're running into a problem that is multi-decades. Shingles have been going into landfills for the last 40 or 50 years, and they will be continuing to go into landfills at between 13 and 15 million tons per year. Anytime you take a look at multi-decade products like that we can leverage and get paid for, that increases our capability in terms of showing that we can do multi-decade revenues. Next slide, please, Abby. Marcus, anything you want to add to that slide before we exit? Thank you. And what is energy transition? If we take a look at what the International Energy Agency Sustainable Development Scenario, SDS, aggressively described in terms of decarbonization forecast, showing long-term growth, rolls from oil and gas in terms of what we want to do, our demand levels are increasing. But we know what we're doing is we're basically having trouble finding hydrocarbons, and it's not the right thing for the environment. This is an energy transition, I think, that's hitting every jurisdiction on the waste management side. How do we utilize our waste to make sure that what we can do is glean more energy out of it? How do we understand how we can basically reduce the waste and go through the entire process of making sure that we have sustainability as we keep growing on this? Marcus?
Yeah, I think a lot of investors will be familiar with that jumping into electric cars, feet first, hasn't been great for a lot of the big car companies, and we know that there isn't a charging infrastructure able to handle a quick binary switch to electric cars. And what we're talking about is a transitional economy where we migrate to things that are better for the environment without impacting quality of living, and that's what energy transition means. And I think the beauty of Sky Quarry is that we're going to be a small, nimble player in that space that will essentially be a guiding light for larger companies that are going through the same transition. The big oil companies are investing in solar and wind technology, renewable technologies, and we're doing thing on a smaller scale. Part of our technology portfolio will actually be deployed and licensed to bigger companies for additional revenues to us. David?
Yes, and one final point on that. We're going to touch on this later as we go through the presentation, but when you take a look at the successful companies in terms of an energy company or an Apple or anything like that, they always go through the same process as we have. Upstream, midstream, and downstream. We want to control our product all the way from the extraction side, all the way through in terms of midstream, where we basically take the shingles and start the recycling process to make sure that we can separate those elements and start transforming that liquid asphalt back into energy, and downstream with our refinery. In terms of making sure that we can take this oil, this blended oil, sustainable waste energy oil that we're working with, and more importantly, take a look at how we start taking a look at sustainable diesel fuel, sustainable naphthalene, sustainable aviation fuel, sustainable. This is the market that we have to make sure that we really throw ourselves into, because if it's not now, 10 years from now, you're going to be looking at this and saying, right, this company understood the future in terms of what we need to do around sustainability. Next slide, Abby. Thank you. And there's the problem. When we take a look at it right now, 15 million tons of waste asphalt shingles are put into landfills every year. And when you take a look at the breakdown of the shingle, which Marcus will do later, that means that roughly 20 to 22 million barrels are put in the landfills every year. Now they're contained within the waste asphalt shingle, but over the period of time of 40 to 50 years, the EPA thinks that some 700 million tons of waste asphalt shingles have gone to landfills. The equation on that, that's over 1 billion barrels of oil. Again, multi-decade problems create multi-decade revenues. But what we're seeing now is that while the shingle doesn't decompose, it starts to basically break down. It starts leaching out its components. We're now seeing, and the EPA is seeing, and the states are seeing, and jurisdictions are now seeing, that we're getting contamination with regards to surface soil, surface water, and that has to be controlled. When we take a look at what we're looking at right now, this is a problem that as we go through requires an industry to make sure that we resolve that. We feel very strong in terms of making sure that we're actually at the forefront in terms of leading this industry. Marcus, anything to add?
No, you covered it, David.
I think this is yours, Marcus.
Yeah. So the idea was really to reuse, what we're already pulling out of the planet. So is to be more efficient in the use of the resources that we have, and the elegance of shingles as our lead product is truly the fact that shingles are 100% recyclable. Not only do you get the oil out of the shingle, but all the other components of the shingle are able to be separated and reused into various industrial applications that we'll detail later. So that's really one of the most exciting things about what we're doing. David?
Well, and I think the other exciting thing about this, Marcus, is when you and I took a look at the technology, our EcoSolve technology, understood what it could do. And we started to take a look at other aspects in terms of where we could use this technology in terms of other waste. Both of us landed on waste asphalt shingles, very quickly, because this is an area where we get paid a tipping fee to take that ton of waste asphalt shingles. We're going to discuss those economics later, but I want people to key in on that, is that we get paid to take this waste and basically separate it, produce those elements, and sell those elements back into the whole infrastructure jurisdiction that we're looking at in the United States. Thank you, Abby.
I see that there are a fair number of questions coming in. We are going to save them till the end, but I did notice one question kind of on this theme about the safety of the process. And there was a question about your technology. Oh, guess what? That's next.
That's right. I was going to say, Abby, a perfect segue. Thank you. That's why you do this. Your answer. You should answer the question too. That was a great question. Thank you, Abby. At a high level, what we do is we create a closed loop system in terms of making sure that we can go through multiple steps. We've broken down to 4 steps here. The first thing is basically taking a look at the waste asphalt shingles we get and start grinding them. That is a removal of the debris that's within the waste asphalt shingle, wood, nails, tin, and so forth, and we get that out of there. Then we go into what we call our mixing process, but this is really part of the EcoSolve process. That's where we start to take a look at basically injection of our solvents as we're milling this and breaking it down. And what we're doing is we're attaching the liquid asphalt from the shingles and making sure that's resonated and captured within our solvents. Then what we do is we basically take a look at it as the liquid asphalt and the solvent rise. We can skim that off, but the solids basically start sinking to the bottom. The remaining solids we then go through, and what we do is on a mesh setting as well too, we go through and understand how we do the separation of that. We separate as much limestone as we can, the calcium carbonate, the shale, the fiberglass, everything as we go through this. But really it comes back down to is that our mechanical and IP process around the distillation. How do we take a look at this oil and repurpose it in terms of transportation and blending capabilities in terms of making sure that we can have that reuse capable for us? Marcus is going to touch on this page and two in terms of some of the key advantages.
Yeah, the beauty is we're able to generate a barrel of oil for about $30 a barrel. So regardless of what happens with the pricing of oil, we think that we have a very good operating cushion as far as pulling these materials out and creating a barrel of oil that we can then send to our refinery. David?
Yes, thank you. Next slide, please, Abby. And really, this is what our energy process looks like for sustainability. And if you take a look at it, as you drive down the road and you see this artist rendition of a massive building going up or a shopping mall going up, it always looks so pristine. I like this as well too, because what we can do is show you is that this is not a rendition. We have these assets. The first thing is making sure that we understand that we have the capability for waste shingles. Marcus and his team have done a tremendous job in business development in terms of making sure that we're starting to take a look at the contracts that we can get. He's also working on transportation with his team and also the logistics group, and in terms of understanding how do we save money on backhauls and using the rail as that. But when it comes back down to it, our waste asphalt shingle modular facility is 80% complete. It'll be completed in early 2025, rolled out at that time frame, and we have our first modular facility going. I'm going to speak on basically the economies of repeat as we go through this in terms of saving money in the future on maintenance and also capital expenditures for our modular facilities. But the two bottom ones is really key to us. PR Spring Extraction Facility, already in place, a 2,000 barrel a day extraction facility built for $53 million, sitting on 6,000 acres of land with 180 million barrels of oil in place, adjudicated at $166 million as a desktop appraisal by McDaniels. It's in place. It was operational, and we're retrofitting that down to make sure that what we do is we have better economics with regards to our environmental, earth, water, and air expenditures, and making sure we create a true closed-loop system on that. But the jewel on the crown is definitely the Foreland Refinery. This allows us to make sure that what we can do is pull in as many of these blends that we possibly can, and as we increase our sustainability percentage from waste energy, we have a refinery that will do 5,000 barrels a day, allowing us to make sure that what we're doing is issuing out sustainable diesel fuel, naphthalene, kerosene, which I mentioned before. There's a huge market on that in terms of Marcus is going to talk about the uplift that we get in terms of sustainable aviation fuel, sustainable diesel fuel, and so forth. Marcus, what would you like to add to that slide?
Yeah, so I think this does provide a big picture of our operations and how the logistics are going to work, and how we've kind of reduced various risks as well as increase the opportunity. So the beauty of having our own refinery is that it gives us a lot more flexibility as far as the end market products we can sell, and also provides direct offtake for what we're making in PR Spring. One clarifying point is we intend to have regional grinding facilities that are separating the large solids out of the shingle so that we don't ship them back to Utah. That includes the sand as well as the granules on the shingles, which we can get rid of, where they're collected, as opposed to bringing it all the way to Utah. So on the bottom left corner, you actually see all the products that we can make out of the refinery, and those are both commodity products as well as sustainable products. And the key to having the refinery is the fact that we can actually tag and prove end market products as sustainable, which is where you can get your full premium on it. In the current market, a sustainable jet fuel costs 3 times as much as a traditional jet fuel. Diesel doesn't carry the same premium yet, but it might in the future. So we have a lot of flexibility and a lot of benefits from our current design footprint, with obviously the efficiencies that will come from our modular rollout and national footprint coming in the future. David?
Yes, and last thing I want to add on that, Marcus, is that when you take a look at circular economies, successful companies are built on the aspect in terms of making sure that they control their product from the very inception where they receive it to the selling point. There's no handoff. So there's no loss of funds in terms of making sure that we have middlemen come in on our waste asphalt facility side. There's no basically transfer fees that we have to pay. And that bottom line increases our value, which ultimately increases shareholder value. We've done this before in terms of understanding how to create a successful company. We want to make sure that basically the shareholders get the dividends and understand that the value that we are creating is for the company and for them. And that means that we're not having any handoffs to middlemen as we go through it, but a very good structure. Thank you very much.
Yeah, so just a bit of our timeline. David and I started Sky Quarry in 2019. In 2020, we acquired 2020 Resources, our PR Spring facility, at the beginning of COVID. We spent the next little bit preparing for our crowdfunding in 2022, raised $18 million, which facilitated the acquisition of Foreland Refining Company, which really created our current asset footprint for the company. We spent the last year and a half working on the retrofitting at retrofitting at PR Spring, as well as operating the Foreland refinery, with the preparation for doing a warrant offering earlier this year, which was successful, as well as planning for this NASDAQ listing. So this is really going to be an inflection point for us, especially once we get the PR Spring facility up and running around the end of the year. David?
Well, I think that what this shows is that I want shareholders and future shareholders to look at this is the time and effort that we put into this. Anytime we've gone from 2019 to 2024, our certainty in terms of de-risking the technology, de-risking the play, de-risking our assets and so forth, all ties into that as well too. So what you're looking at is a construct of a very well-established company with the assets in place, but we understand now how to run them, how to make sure that we go through the entire process, but really the time gave us the ability that we've de-risked these. So I think the shareholders will take a look at how we've gone through this process and understand that this is not a short-term benefit. This is very a long-term endeavor. This is Marcus's slide. I'd like to say something first before he starts, but him and his team did something phenomenal with regards to this 18 million crowdfund and the people that supported us through this, right, Abby? That went through this entire process. But Marcus, please continue with this slide.
Yeah. So, yeah, I worked at one of the biggest market makers for public equities in New York for a good long time, and I saw the benefit of having a large following and a large retail shareholder base, and as crowdfunding came to the forefront, I saw this structure or these opportunities as a great way to build that shareholder base before you're actually a public company. And right now we have over 7,000 shareholders, and I've always felt that this is a great public company story, and would really be a very viable investment for retail investors because we aren't a highly capital intensive company. We don't need multi-billion dollars in investments to build either chip fabrication or to invest in AI or anything like that to attack our business model, because as we roll out our modular facilities, they generate a lot of cash naturally, and so we have a very, I would say, constrained and efficient capital allocation strategy that allows for small investors like our current investors to participate without the risk of us not being able to raise billions of dollars in the marketplace. So it's a great public company opportunity, and the fact that our efforts have made us one of the top 1% of crowdfundings in history just speaks to that it's a good fit. People want to do good, but people also want to make money, and that's our story. So we're excited. This is going to be our capstone, I think, this offering and going public on NASDAQ. Again, we're in the top 1% of crowdfundings ever. I think the top 25 deals out of over, say, approaching 9,000 in the history of crowdfunding. So we're even less than it's even more exclusive than the top 1% at this point. So thank you to our current shareholders that are on the call, and I apologize in advance, because you're hearing a lot of the same information over and over, and I invite you to reach out to David and I directly. I take dozens of calls a day from shareholders and explain what's going on, and obviously we're not allowed to share inside information or non-public information, but the specific questions we're happy to answer, and again, I think that's part of what you deserve as investors is access to management, and I think that's one of the benefits of this structure. So we're excited about what we've achieved and where we're going. David?
No, thank you, Marcus. No, and I can't say enough about this from an operational perspective. When you take a look at what you need to do around acquisition and the retrofitting, and you go to the next slide, Abby, and that's a good introduction to this. What we need access to, more time and more money. We don't have the ability to create more time yet, but we're working on it. But really, when it comes back down to funding, Marcus and his team has made sure that we've had the ability to execute our plans in a stepwise approach in terms of making sure that we get the highest efficiency around our earn for our money, both on a capital project basis, a maintenance basis, and so forth. So again, the collaboration of the team has allowed us to make sure that we've moved very quickly over this 5-year period to establish ourselves as a leader within this industry. And I really think it comes back down again to our assets. the PR Spring facility, and I've talked about this, acquired in 2020, built for over $50 million, sitting on 6,000 acres of land, 180 million barrels of oil in place. But this facility allows us the capability in terms of doing massive extraction of waste asphalt shingle and blending that with crude oil, unlike anything that's been seen in the U.S. thus far. So again, it is one of our primary assets in terms of making sure that we can utilize this. Again, to touch on that, we spent about $5 million in terms of retrofitting with regards to our EcoSolve technology. We have about another $3.5 to $4 million to complete that. But we hope to be active with this very, very quickly in 2025. And you'll see this generate extreme revenues as we go forward and moving down that path. Next slide, please. And Marcus, jump in anytime as you like in terms of this, but really it comes back down to Eagle Spring Refinery created immediate accretive value for us in terms of what we're looking for. Permitted for 5,000 barrels a day. What I like about this is that due to the jurisdictions that we're in and basic logistics for oil, it's currently processing just under 500,000 barrels of oil annually. To align ourselves to even stay within the limits of our permits, we can double this up to 1 million barrels of sustainable oil per year. And what we do is we lessen emissions, we tighten up our water use, we basically go through the entire process of being more efficient on that. And what we want to do is really align this with our renewable oil vertical integration aspect of it as well too. How do we make sure that we basically get a premium for this? It's a stepwise approach in terms of increasing our blend capabilities with regards to sustainable waste asphalt oil. We've already gone through the process of testing blends at 10% and 20% and still get the same refractoring capabilities of the diesel fuel, vacuum gas oil, naphthalene, our asphalt paving liquid. But we see this as a benefit to us. A lot of companies are going to try to go from 0 to 100 very, very quickly. We have the ability to make sure that we are 20% sustainable by 2027. By 2030, we hope to be over 30%. But by 2035, we wish to be at 50% and show a game plan in terms of how we're going to be 100% sustainable waste energy oil at that time. And when you take a look at these assets, PR Springs, $50 million, over $50 million to build, we acquired that for roughly $3.5 million. If you take a look at the exceptional value that we have with the Flowing Refinery, to build something like this, even if you can get the permits, is probably going to be well over $70 million. We got that for $7.5 million. We have basically executed our acquisition portfolio very, very well in terms of making sure the benefit and the upside goes to the company and the shareholder. Marcus, anything you'd like to add?
Yeah, the only highlight I'd like to add is it's always better to disrupt and create change from inside an industry versus the outside. And the beauty of owning this refinery is that we can introduce sustainable products into a customer base that already exists and has existed for many years. And I think that's always an easier selling proposition to drive sustainability is with customers that are familiar and trust you as opposed to being an outsider. So that's really one of the benefits. David?
No, that was great. Thank you. Next slide, please, Ed. Okay. Marcus, I'm going to let you start on this one in terms of the tipping fees and get to the granular detail on that if you wouldn't mind.
Yeah, so really the starting point for us is getting paid to take the waste, and I think that differentiates us from a lot of other businesses in this kind of recycling sphere. We want to get paid to take this material. We're going to set up the infrastructure so that we're making it easy and efficient for builders and contractors and waste management companies to actually work with us and to get us some material. And the idea being, we want to be able to receive the material in a location that's more convenient than a landfill at a price that's lower than bringing it to a landfill. And as long as we can do those two things, we also intend to set up a franchise network of haulers so that it becomes easier and easier to do the green thing when it comes to replacing your roof. The tipping fees range from 45 to 150 a ton. The average in California is $94 a ton. This obviously really can help build the bottom line for the company because we can offset any of the collection and processing cost of the shingle with that tipping fee, so that the majority of the cash flows that are generated from selling the materials can fall to the bottom line. So it makes this a very attractive cash flow opportunity. David?
No, thank you very much, Marcus. One of the things I want to tie back into is that our business model not only is sustainable, but what we want to do is adapt ourselves basically to organic growth, limited debt in terms of what we're looking at, but really what we want to do is be a company, because we're multi-decade, to step into a dividend payment. And we believe that when we take a look at this and work with our auditors and work with the board of directors around this, we're going to be a company that basically migrates with regards to its free cash flow into a dividend payment. Now, we believe that we can probably get there by 2027. It's a lot of planning to get there. But if we can accelerate that in any way, we will. But the benefit of this as well, too, is that because we are so opportunity rich and have the ability in terms of making sure that we get these tipping fees, which I think are going to increase, it allows us to make sure that what we can do is benefit the company and shareholders again. And really what it comes back down to is return of investment. And I've always said that I always invest in companies to provide dividend payments, because I can utilize that as income and still hold on to the shares. So one of the things we want to take a look at is that we have a very strong fundamentals in terms of what our economic business model will be as well. Thank you, Abby. Next slide, please.
So what makes up an asphalt shingle? The bulk is actually that heavy oil that we're talking about. Then you have the granules that sit on top. They're the larger pieces that have the different colors. The sand gives the shingle its volume, as does the limestone powder. So those two materials are really used to kind of give the asphalt something to grab onto. And really the fiberglass is the substrate. So that is what everything sits on, and that's what gives the shingle its shape. The beauty is our process separates all those materials, and they all can find a market based on being an industrial feedstock. So we're really looking forward to it's always nice when you can have a product that's 100% recyclable, because then there's no ultimate waste that you have to get rid of once you're done processing it. David?
No, I think that was very good. And in the top right, we have there is that, every ton of received asphalt shingles is expected to be worth about $295, including the tipping fee. So we have that built in there. But what we want to do is that, over this term, in terms of making sure we get to 2027, we want to be between 400 and 500,000 tons per year in terms of waste asphalt shingles. When you take a look at the revenue that we get just from tipping fees at $50 a ton, 400,000 tons per year at $50, that's $20 million in revenue that we get just by accepting the product that we want to work with. So again, I take a look at it as that, I'm always conservative in terms of what I look at as well too, but it's very easy for us to get that worth in terms of that 250 to 290 region as well too. And I'm very keen on that. Now, those are current forecasts going forward, but because we have such a large infrastructure bill, we have a $1.3 or $1.7 trillion infrastructure bill for the United States. A lot of these products we're looking at, the sand, the limestone powder, some of the fibers, some of the aggregate that we're looking at as well too, go directly into that market. So we believe that we have a very, very strong sales force in front of us right now that's going to use these projects for multi-decade. Thank you, Abby.
So the national and state regulatory landscape is actually pretty dynamic. You have most of the states control this process. You have a state like Vermont that is banned shingles from landfills entirely, but it creates another problem, because now the tipping fees in Vermont are exorbitant, because you get to pay for shipping that shingle to another state where it goes into a landfill. So you're actually not solving a problem. You're putting it in somebody else's backyard. That's going to stop ultimately as we develop a national footprint. We're going to support regional legislation that bans shingles from landfills, but only once we've established a solution. And that obviously does have the opportunity, creates an opportunity for for us to be, the only player in a certain market and a one-stop shop for getting rid of these shingles, which obviously we like the idea of. And so this is also driven through the building code. So a lot of municipalities are demanding that builders prove that they're recycling part of their construction and demolition waste as part of an expansion of a house or a re-roofing of a house or a renovation. And so that's also going to drive alignment with recycling. But ultimately, people are lazy. So our job is to make recycling a shingle cheaper and easier than getting it to a landfill, and that's our ultimate goal. Uh, Obviously making money for ourselves as we work along that path. David?
Well, thank you, Mark. Well said. But I really think it also allows us the ability of another revenue stream. As I said before, if we get to 2035 and we have 20 systems running, we're only doing about 20-25% of the annual waste. This allows us in terms of making sure that we can follow with regards to national and state regulatory changes. But I think that gives us a tremendous upside in terms of joint ventures, licensing agreements, deployment of our technology with third parties, and deployment of our technology on a worldwide basis. The United States has probably the largest problem with regards to waste asphalt shingles, but it is not solitary to the United States. So that's where I see this, is that the national and state regulatory process is pushing towards better ways to make sure that what we can do is ultimately control the waste and repurpose that waste as we go through this entire process. Thank you, Abby.
So this slide is a little bit different than the other beneficial cycle. It's more the pure shingle beneficial cycle, and this is what the shingle companies are going for. Obviously with our assistance, and it includes getting the shingles off the roof, but then us processing all those materials so that they can actually go back into new shingles. So the shingle companies are very excited about developing a shingle that is partially post-consumer. And we can support that. The shingle companies are the ones that are, buying about 20 million barrels of oil a year just to make the new shingles that are going on the roofs. And they would love to be able to buy, shingle oil and granules from us so that they can have a shingle that's 20, 30, 40% post-consumer material. So this is a long-term goal of ours, and we're in discussions with the big shingle companies to achieve this. But the beauty is our business model gives us so much flexibility that we're not dependent on this to happen at any point. This is always just icing on the cake. So, but it's always good to communicate it. David?
Yeah, and I think I'm going to have you touch on one more thing, Marcus, when I'm done with my comment. When you take a look at the ability in terms of making sure that what we can do is control disposal costs now, ultimately, the people that pay the tipping fee are the homeowners. Marcus and his team have developed an online shopping plan where a homeowner can now basically get credits for their shingles in terms of making sure that they're recyclable. But when we take a look at this, the whole aspect on this as well too is that we can basically stop this in terms of price gouging. We can set a standard in terms of tipping fees. So really it comes back down to the benefit in terms of this is being a homeowner with shingles, utilizing our process to make sure that we move forward on that. And again, making sure that we have the ability for profitability for our company and shareholders going through it. So I think that because we have such a massive problem in front of us, it's going to be a little bit of work, but there is a lot going on in terms of making sure that we can work with this industry to lead the way in terms of fostering sustainability. Abby? Is this me or you? I wasn't too sure.
This is you,
Mark.
but
Oh, is it? Okay, yeah. See, look at that's how well we work together, right? Took that many slides to basically ask the question. We believe that there's a tremendous opportunity with regard to carbon capture and sustainability credits. If you take a look at the slide and so forth, you take a look at, we're just entering that phase. But when you see 2035 in terms of where we want to get to in terms of understanding, $10 to $25 billion worth of carbon capture credits available for that. But then it basically rises fairly quickly, right? What we need to do is make sure that we align with that. So I think that we're going to be very, very strong because of our technology, our closed loop system, the proprietary solvents that we use. We want to make sure that what we do is understand that there is a way to do this job without benefiting in terms of too much carbon, too much water use, too much land use, and so forth. We need to make sure we're restrictive on those areas. So we think that this is going to be a very, very strong financial benefit to the company. And as we roll out our portfolios, we'll have more clarity on that probably mid-2025 in terms of what that means as a bottom line to the company. Marcus?
Yeah, we're looking both at the carbon capture opportunity as well as the carbon credits. And as we build our sustainable side of the business, that will come more to the forefront. There's also dozens of kind of tax opportunities as well as credit opportunities created around creating a low carbon fuel, which we think we'll be able to achieve using waste material to create transportation fuel. So it's obviously a growing opportunity. The one thing I want to highlight is our business model doesn't depend on any of these subsidies or benefits. It's only enhanced by this kind of stuff. Our business model is grounded in providing and achieving a low cost fuel just through our business structure, and then obviously any credits or tax benefits we get would be additional on top of that. And we think that that's important to create a long-term viable business, because tax breaks and government money doesn't always last forever. It certainly doesn't last forever. So we want to create a business that can stand on its own 2 feet, and that's what we've done.
Thank you, Marcus. It goes back to the old saying that we have around the table, right? It's not how much money you make, it's how little you spend. And we really watch ourselves on that. Why do we think it's built for success? Because of our assets and what we've done in terms of de-risking our portfolio over this period of time to make sure that our solvent is fit for purpose, our technology is fit for purpose, but more importantly, our assets are built for purpose. We've had substantial growth in terms of when we started, up to 211%, but really that means nothing in terms of making sure that what we do is we have positive revenue. 2022 and 2023, we were both over $50 million for those 2 years in revenue. We've seen in 2024 a bit of softening in terms of WTI pricing. Since the May timeframe, we've seen it basically move from about $85 down to about $68. So we're seeing a depression on that. But we don't think that our economics are going to be affected that much by it. But it does affect our product sales in terms of discussions around pricing on that. We're going to be very, very close to the revenues that we have. But what we'll do is we'll make sure that we come out with that. But I want to make sure that people are aware, as Marcus said, we may be commodity driven right now, but as we implement our other portfolios around midstream, around our waste asphalt modular facilities, garnering the capabilities of increasing our tipping fees from 100,000 to 400, 500,000 per year, and making sure that we're selling products in a sustainable process through our refinery into areas that really, really need it, we think that we are very, very strong in terms of the success and revenues that we'll have into the future. And again, rapid scalability, I want to talk about that. Once we basically build our first modular facility, there may be a little bit of work in terms of the operations group, the engineering group coming back to us, but it comes back down to that we have the economies of repeat. We don't build the next one, we build the next 4 or 5. That allows us to make sure that we can reduce our costs in terms of fabrication, engineering, construction, commissioning and startup, maintenance all the way through, because what we're doing now is leveraging these 5 for one ability to make sure there's shared service amongst them all. Then we go through and we do a revision and we implement another 5. And by that time as well too, we're going to be rolling out scalable operations in terms of 10 modular facilities at a time to make sure we're at 20 by 2035. A stepwise approach, it's not capital intensive, but it does give us the ability in terms of getting into the market and making sure that we're showing revenue and returns on that. When you take a look at the payout systems that we have in place right now, the PR Spring facility will pay itself out in under 2 years. The Foreland refinery pays itself out in under 18 months. The waste asphalt modular facilities will pay themselves out in roughly about a 2-year period, but then garner $6 to $7 million a year in terms of what we're looking at for free cash flow. We really want to push ourselves down that path in terms of making sure our midstream department and our portfolio expands aggressively in terms of what we're looking at with regards to what we have in front of us. Marcus, anything to add?
No, the only thing is, you covered it. It's really being able to generate cash flow to pay off these systems quickly. These systems, you have proprietary technology, but the equipment itself is pretty off the shelf, and it's really just the way we put it together, the way we operate it, that makes it do what we want it to do, and that's why we do have some pretty high achieving goals for where we're going on a go forward basis. David?
Thank you. And I think that we've talked about the asset, but I want everyone to take a look at this, right? A purchase of $3.5 million, and if you had to do a replacement cost in terms of greenfield operations, you're looking at $70 million to build a PR spring. The value in that is instrumental, and the same thing with regards to the Foreland refinery, right? To get the permits if you possibly can, and to make sure you build a proper refinery that can refracture those types of products, you're still looking at another $70 to $100 million in terms of building that and getting the permits in place. We're very happy about the fact that our team went out, we found these assets, we purchased these assets, we're building upon these assets, we're saving the shareholder in the company a tremendous amount of time, effort, and money in terms of making sure that we retrofit and we build for purpose in terms of what we're looking for as we move forward. Marcus, anything to add?
Yeah, I got knocked off the call for a couple of seconds, but I think that it is two interesting line items on this slide are the value of a refinery license, because that's effectively they aren't handing those out, and obviously the patent portfolio that we can deliver and license going forward. So those don't have values attached to them at this point, but I would say that they're extremely accretive to where we're going on a go forward basis.
Thank you, Marcus.
Seen a lot of questions coming in. I do want to say we've only got about 13 minutes left, and I wanted to kind of touch on the patent portfolio in regard to competitors. I'm seeing that question come up quite a bit, but before you answer, I just wanted to let the audience know that there are some questions we won't be able to answer here, specifically related to forward-looking statements, specifics about the IPO. But anyway, so maybe Marcus, you could talk a little bit about competitors and how that relates to your IP portfolio.
Yeah. So the best way, I think that the best way for us to defend our first mover advantage is to actually keep being a first mover and move aggressively forward. So I think as far as the competitors we're seeing on the landscape, we have in the country. Once we get PR Spring running, we end up being about 50 times our nearest competitor in size. So we have a lot of room to attack, and we're gonna go after the most attractive markets in the U.S. to kind of build our fortress as far as where we want to do business. And those are markets that have high tipping fees, have a lot of demand for either refined products or crude oil, and we've identified a dozen of our first locations, but we think that there's room for about 50 facilities across the country. And everybody's always trained to ask about the competitive landscape in an industry, but there is no real competitive landscape as far as we see it, because we're the first mover, and 95% of this material is going straight to landfills at this point. So it's going to take us a while before we make a significant dent in the amount of material that's going into the landfill. So we're not trying to help solve the problem with us.
Yeah, one thing I want to add on that, Abby, is just that the expansion of our technology and our patents are always going to be expanding. They're always going to be moving forward. We are working with a shingle manufacturer now to understand how are they creating the shingle. What better can we do with polymers, graphenes, and so forth in terms of making sure that we go through this opportunity. So what I like about this is that Marcus said it well. There's such a harsh problem that we have out there right now, is that we're going to start seeing the collaboration and consortia of individuals and sectors working on this problem together. And that's what I like about this. So give us another year or two as well, and we'll understand and have that forum in place. But there's a tremendous amount of upside that we can do with regards to our patents and evolving them as we move through this process. Thank you, Abby.
All right, this was another very common question. People want to know what comes out of a shingle.
You hear the materials of a shingle are kind of the middle 5 bars on the left side of this slide. So you have sand granules, limestone powder, fiberglass, and crude oil. So everybody knows what crude oil is. The fiberglass can be used for a lot of industrial applications, including adding it to roadbed to make it stronger and more flexible. The limestone powder is often used in construction, and the granules are kind of the big ceramic or stone pieces that come off the top of a shingle, and we want to get those back to the shingle maker so they can reuse them. And sand obviously can go into any typical construction project. So those are the materials coming out of a shingle.
And I think we've talked about the expansion strategy. Again, I believe we're opportunity risk, right? When we take a look at the opportunities out in front of us in terms of how we tied that back in with logistics, haulbacks, making sure we have access to infrastructure and egress, our team's done very good in terms of basically exposing the best locations that we want to go, but more importantly, how those locations are talking to us now in terms of what we could do with their problem. We've touched on, the expectation in terms of 400,000 to 500,000 tons of product by roughly 2027. We've taken a look at being the first entrance into this in terms of making sure that we can be our first commercial modular facility running, in the end of 2024, early 2025 upon completion of commissioning and startup. But really it comes back down to revenues. What I like about this is not capital intensive. We have short payback periods. And again, I can't say it enough. Anytime you look at a multi-decade problem, you're looking at multi-decade revenues. Thank you. Anything to add, Marcus?
Yeah, our business model is West Coast heavy as we start, but the ideal is to build a national footprint, again aligned with off-takers and shingle supply. So you see a lot of activity on the West Coast just because the tipping fees are very high, but ultimately it's a national problem that we intend to solve.
Thank you.
David mentioned it previously. We've launched a shingle offset program where you can offset the carbon footprint of your waste asphalt shingles if you choose to do so. We talked a little bit about the credit market. That's a big delta in the form of potential revenue for us. And then obviously, hydrocarbon processing, which is what we're going to be doing out of Utah. So we have a lot of changes that are going to come to the company that are going to support the stock and move the company forward. Specifically, getting the PR Spring facility up and running next year, should be in the quantum of doubling our revenue as we move forward. So we're really excited about bringing that into the portfolio. David?
Well, yes, and what we can do is leverage a lot of the expertise that's out there already. So when you take a look at the recyclings done around used engine oil, or you take a look at the recycling done around other aspects of hydrocarbons that we're looking at, again, we have the ability to make sure that we can follow them as fast followers, leverage the technology and leverage some of the inputs that they've done on the basis of this. But Marcus is correct. What we want to do is we want to be a company that repurposes and recycles oil, making sure that we wean ourselves off the dependence of natural crude and start as a company, as a sector, as a jurisdiction, as a country. How do we start going through the process of making sense of our waste? And we're doing it one shingle at a time. So that's how we're going through our process.
Great. Well, I do want to make sure we have a few minutes to talk about some of the questions that we hear. Many of them are about this very topic that we have on the slide here. So maybe one of you could talk about this a little bit.
Sure. Obviously NASDAQ listing targeting the end of the month. We're very excited about it. I would say one of the real benefits to us is obviously it gives the people that have supported us an opportunity for a liquidity event. But I think from a bigger perspective, we want to be a consumer-facing brand as a national company. So we want, we're going to set up a toll-free line, and ultimately people will be able to call us and figure out, who's going to be a Sky Quarry, affiliated roofer that adheres to, green roofing practices, green or companies that are going to be collecting shingles for us for processing, and that way it helps with the circularity. So a public company that has a consumer-facing brand is always beneficial. So we also take the responsibility and the benefits of being a public company. It's going to help us with capital formation. It'll help us with affiliations with larger entities that'll look to the fact that we have governance in place and we're audited as a sign of quality. So we're excited about making this move, but we want everybody to understand that this is merely the next step. We've made our early investors 5 times their invested capital up to this point in 5 years, which is pretty good. But we see so many opportunities going forward to lift the share price from our initial listing. So this is not the end point. This is the starting point. David?
No, well said, Marcus. And I just want to close on that. When we take a look at the ability that we have in terms of revenue streams, but a multi-pronged approach in terms of revenues, that's what you want to get into. And I can't say it enough in terms of we have a multi-decade problem. As we go through this, these products that we're replacing and basically going through and reconstituting and taking from waste energy and putting back in the infrastructure is going to be multi-decades. This is going to be a sound long-term investment for you in terms of what we're looking for, because we've structured it like many large companies in terms of midstream, upstream, and downstream operations. So a lot of work has gone into the benefit of this, but thank you for those that have invested in us already and those who are about to invest. And again, as Marcus said, if there's any questions that we can't get today, please get them to Jennifer, get them to our website, and we can address them as well too. But I'm pretty sure, Abby, you've got a lot of questions out there now.
Yes, indeed. And I've been referring people to email any questions that they have to ir@skyquarry.com. And I really want to remind everybody that tomorrow is the last day to invest in this current opportunity. So head on over to investor.skyquarry.com and this is your chance.
We have 2 minutes left. We can answer a couple of questions.
Yeah. You know what? Let's get to questions. We've got a lot of questions on common themes, some of which were about business operations, a little bit about expansion plans, a lot about shingle collection and transportation, like how the shingles get to the facility and partnerships. Maybe you want to tackle that?
David, do you want to talk about partnerships a little bit? Because I think we've covered most of the other stuff.
Yeah, what we're doing right now is that as we roll ourselves out in terms of making sure that we have our commercial systems in place, we are basically taking advantage of the expertise of waste management companies, shingle manufacturing companies, other recycling companies as well. So we think that there's a tremendous upside for us in that as we roll forward with it. Again, talking about joint ventures, licensing agreements, and so forth. As Marcus said, we have 50 opportunities in front of us when you take a look at the jurisdictions where waste asphalt shingles are in that range of 150,000 tons or more. So we think that we've got a stepwise approach in terms of making sure that we are very, very particular with our capital expenditure, making sure we don't take on too much debt and understanding how we get to a point of profitability. But the tipping fees as we move forward are definitely going to help us as we go forward with that. Anything to add, Marcus?
No, that's a good one.
Okay, well, one last question here before we let you go is technology and process. We had a lot of questions about potential applications outside of shingles. Is there anything else on the horizon?
We are looking at things like plastic recycling, waste tires, and things like that would be complementary to what we're doing with the shingles. But again, based on my experience, we also don't want to be too distracted. We've identified what we think is a whale of an opportunity, and we need to execute on that. And we'll only allow ourselves to kind of diverge into other opportunities, kind of once we feel like that we have this one nailed. So, and one thing I did want to mention is a lot of the pretty pictures that you see in this presentation are actually our facilities. These aren't stock images. These are actually pictures of our equipment and our people.
That's right. You guys are the real deal. Okay, here we are. It's the final minute. Tomorrow's the last day to invest in this current round. If you have any questions, the team is very welcoming of you reaching out. So please contact ir@skyquarry.com. And once again, thanks both to Marcus and David for sharing with us today. Excited to be here, and let's make the most of these last few hours. Thanks everybody for being here with us today. Reach out with any questions.
Thank you.
Yes, and thank you, Abby, for doing such a great job moderating. Thank you very much.
Thanks.
Everyone have a great day.